Good afternoon. My name is Scott Redler, the Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So it is Thursday. It's been another week. We have the Fed behind us, and we're at a sort of interesting spot, right? The Fed said they're going to raise rates 3 times in 2017, which was a little bit more hawkish than some would have hoped. You know, for some people, that's what I pretty much projected. If you remember my little Twitter tweet, whatever you want to call it, saying that I think that they raise a quarter, go 3 times, so they should be a little hawkish, which means get out of the way of gold, which has been in a very broken trend since the election. The miners, very broken trend since the election. You know, look to keep the banks strong and then try and figure out whether enough we have enough power to make new highs. So yesterday, you know, they took a little profits, and then today, if you watched the morning call, my strategy was really to, you know, perhaps try and buy the Russell that had a 340 pull-in if we had a red dog reversal or if we held above yesterday's low, and try and buy the spiders, because I do think that with a little digestion, yesterday was not the high of 2016 or, you know, the first quarter of 2017. So anyway, you know, it's getting a little bit rangy, lethargic, spurty, because a lot of people are going to start to leave, go on vacation, close the books. So you don't want to get caught in things that just don't need to be traded. You know, like yesterday I said, it's a tough spot. Cash is a position. If you made your year already, relax. You know, read a book, look at the market, pick spots. Watch a series on your iPad. I would recommend Spartacus. If you've never seen Spartacus before, watch all the seasons, or Game of Thrones, all the seasons, and look at the market with one eye. Or go to the gym, stand on a stair machine, you know, and work off some calories and make some room for the holiday eating fest. But anyway, I'm babbling. Let's go right to the market. S&P cash. Remember the post-Brexit move? The world was going to end, and it didn't. And then your evaluation point, which could have made your entire summer. You could have bought right here and went to the beach. Why would you have bought right here and went to the beach? Because you had a reflex rally up, you saw commitment to it. This day right here was an awesome red dog reversal. I remember like it was yesterday or maybe July, and then boom, 80 handles. So we tried to use that example to show you how to be involved for a meaty move here. Okay, and look at that. Wide range bar, candle that launched a gazillion bulls. And if you missed that, boom. What did it do? Did it fail? No. It held above this descending trend line, gave you time to buy, and you could have, you know, bought a 6, 7, 8, 9 positions and went away and cooked the turkey for a month until Thanksgiving, and then look what happened. So anyway, you know, remember this little, you know, new highs, pullback, another pivot, new highs, and now we're in the process of seeing whether or not the 8-day moving average will hold the way it's held. Anyway, so with that being said, there it is. So do we get another inside day tomorrow? Do we, at some point, break above, sorry, I'm trying to get my little pencil here, break above this little flag pattern to make new highs and get above 2277, or do we need time? This took a little bit of time, and it actually messed with people, so we'll see what's next here. My strategy for the day really was to buy the Russell, the small caps. I wish I had like one of those radio small caps. Anyway, this was the strongest sector. Remember this little inside bar that led to a correction that wound up testing a prior high and all of a sudden was buyable for this? Well, I was kind of thinking that this prior high could be some type of support. So I was either going to get a red dog reversal below this, come back above, or hold it and squeeze leftover shorts that might have been short from the move below 137.75. Well, anyway, that was that, and this is where we are. So the question is, was this it? Is this it? Hold on, delete. Oh, look at that. Now it's much cleaner. So the question is, do we have a little flag pattern here that, with a little bit more time, takes it out and goes to new highs? So at this point, I'm still long some IWM. And if you want to see how I played it in the morning, if you're not on the VTF, let's go to the 5-minute chart. At first, because it was weaker yesterday, everyone was probably trying to short it, right? So here was your morning move, okay? They were trying to short it. They could not. I was long it pre-market, and then once it got above this spot is where I added. Added to it, made a little bit, got back a little bit more flexible, hung here, added, sold a little bit, why I sell a bit, another resistance, and then pretty much held a tier 1 for the majority of the afternoon. And so all of a sudden, it still looks fine. Just drifter, fast move, drifter. Anyway, I should come up with these new technical terms, right? Drifter. If you start seeing the drifter out there on, Thinkorswim or in technical term land, you're starting to see the red dog reversal, and that wasn't a term, 5, 6, 7 years ago. But anyway, so those bounced. What also gave clues is that the banks wound up making new highs early and then just drifters. Goldman Sachs, what did it do? It gapped up, so it wasn't easy. I didn't trade Goldman Sachs, I traded JP Morgan, but here's your gap up. They couldn't bring it in, took out yesterday's high for a quickie, came back, retested it, and then made new highs besides just drifting. JP Morgan, if you were on the VTF, that's what I chose to buy as a bank. I think I bought it somewhere around the 50 cents mark right here. Gapped up, they couldn't bring it in, so I'm like, let me be a buyer. And then it made a new high and did a whole lot of nothing into the close, but hung in there. This too, the banks still look strong. I wouldn't be all in on the banks. They've had a heck of a move, but still doesn't mean they're short. In high beta tech land, probably a little frustrating, right? Amazon, I figured, Trump, woohoo, huge. And Jeff Bezos, they didn't get into a brawl. They actually, spoke normal, and Jeff seemed pretty excited leaving there, and the stock didn't react. So a lot of good news out there. Stock's not really reacting well. I still have half my calls for next Friday, but I'm not in the stock. Why am I not in the stock? Because it's not really giving me a reason to. It's still below the 50-day moving average right here. And at this point, some might even look to short it right here. I'm going to just sit in my options. I bought it here. I sold half, so I'm playing for free. And if at some point something happens where it changes and takes this out, then I'll buy it. But for now, it's not really acting well. It shouldn't be something you're sitting in, without risk defined like calls. Google had a heck of a move. Not much to do here now. Hanging above this range. Let's see if it could stay up here. Let the moving averages catch up. This was the last viable pattern. Took out the 50-day, looking okay, just needing time. Netflix was a great trade early on. I bought it, made money, and then I lost a little bit of money on the pull-in. This was the buy point right here. This was 124.40. You were able to buy that. You were able to add 125.09. Hit as high as 127.43 and just trickle drifter. A lot of drifters today. Anyway, you had to be there quick, and that's why you're prepared with my note. So, all in all, if you looked at why these were the price points, here you go. This was your getting tight, buy it here, buy it there, buy more here. I sold a lot into that, and then I bought a little, and now I'm back into some kind of tier 1 position, and I would have liked it to close stronger. I'm in some. Hopefully there's no bad news tomorrow. If there is, you know what, it'll not make a fun Friday, which Fridays are from Short Hills, and they're not the best anyway, so we'll see what happens. So we'll see. Still looks good above the 8-day, above the 21-day, near the highs. Just wasn't enough to keep going. Apple took off fast. Not much to do there now. No news about, their tax reparation scenario. This is when it cleared this lower pennant. This is when it took back the 50-day and held it, and now look at it looking pretty. So there you go. Lots of little things there. Metals, miners. I know everyone's been trying to catch a little bit of a long trade there, and every single day I want you to go to the archives and see how many times I said sell the metals and miners. Get out of every bounce in the GLD and the GDX. And if you're really good, be short. And the GLDs yesterday showed you the confirmation of this negative trend. How did it do that? Well, it did that by taking out the bottom end of this range. And look at this. What do we say? Below the 8 and 21 day, you want to be out and tactical? Well, here's your 8 and 21 day. This was your failure into resistance at the election, and this is when it lost all the moving averages, your sells, and then it's been trending below. What a cool rule you have, Red Dog. Every time I get to the 8-day, sell it. I can do that until it doesn't work. Well, anyway, broke this yesterday, a little bit of downside follow-through. The miners, what did that do? A little bear flag continuation pattern here. Faked a lot of people out because it wasn't making new lows while the metals were. So yesterday you had to get stopped out, and then you didn't take today's pain, or you could have got short and made a little bit of money. But all in all here too, sold to the man at the 50-day. and then sold when it took out here, and now boom. So lots of different types of signals to move and groove. So at this point, you know what, if you have your Dow 20,000 hat, put it back in the closet. Maybe you can take it out tomorrow. Like I said earlier this week, it's not a big deal, Dow 20,000. It's how you participated from Dow 10,000 to Dow 20,000. Did you participate in a 401k and put money in every single month and you're sitting pretty? Did you start a 529 for your kids so he can go to college and you can have the market help pay for school? Did you become a professional trader, learn technicals, and take out the noise of all the crash callers out there and make good money? You know, these are the things you ask yourself over the last decade. Not, ooh, Dow 20,000, can I make money today into that milestone, and then figure out whether we hold, break it, kiss it, leave it, goodbye, etc., etc. So anyway, we'll see what happens tomorrow. Market's consolidating. We're not that overboard to believe it or not. You have some things to do, but as we progress into the end of December and Christmas and New Year's, there'll be a lot less people out there, and we'll figure out what to do between here and there because we have to make money and net money and keep it going, but you're not going to make your year or your fourth quarter in the last 2 weeks of December. So don't revenge, don't be stubborn, just pick and choose your spots, or cash as a position. I'll see you, not tomorrow morning, but I will be in the city tomorrow because we have our employee grab bag. And I have a secret guy that I got a present for. Anyway, he'll get it tomorrow. Be well. I'll see you, and we'll be in touch. Goodbye.